Today's interview is with Karen Oeser. Karen is a fascinating person that used to be in the investment world, mainly working with corporate bonds and so on. So she then transitioned and realized that she didn't like how structured that was and how her hands were always tied in terms of investment. So she left that business and started investing in real estate full time. And she's now a multifamily investor, syndicator. And she talks about why she loves that space, some of the differences that she sees in the old job that she does into what she does now, and why she loves real estate. One big thing that she talked about was risk. So, and she also talks about financial literacy for women. She has a coaching program with that, why that's so important to her, and a lot of good stuff in today's interview. So stick around for all of that. Hello and welcome to Wrestling with Real Estate, where we look to chokeslam all your real estate problems. I'm your host, former WWE wrestler and now Cirque du Soleil performer, and of course, multifamily real estate investor, Barri Griffiths. Now today we're joined by Karen Oeser. I should have asked you before. I realized I usually ask people this before because I usually mess it up. And then I realized I should have asked you before. So Karen, thank you for being here. Maybe you can pronounce your name better than I am. I'm sure you can. So thanks for being here today.
Sure, my pleasure. My name is Karen Oeser.
Okay.
And I don't know anybody. In fact, it's really funny. My son just sent me a text. He's going to Clemson right now. And he sent me a text earlier this morning. He's like, I had the first professor in my entire life say our name correctly. So, yeah. So anyway, I hail here from Greenville, South Carolina. And the name of my company is Eastlight Investments, and we invest in value add properties, both here in South Carolina, as well as I just bought a property in Arkansas, which is an interesting market that I've just moved into. And I'm also a passionate advocate for financial literacy and also always about mindset development.
Wow, that's interesting. You're the second. Yesterday, I just spoke with someone in Kansas City who invests in Arkansas. She literally just bought a 72 unit in Arkansas as well.
Oh my gosh, so you talk about Jennifer, right?
Yeah, I should have known you.
That's my deal too! I'm in it!
Ah, awesome. Okay.
Oh my gosh, beautiful. I have to tell her. That's so funny. So I guess you know what to ask me about it. That is so funny. Yeah, because one of my big hacks I talk about is, going to different boot camps. And I met Jennifer at a boot camp, and she and I have actually become very good friends. And so when she told me about this deal, I said, that's a no-brainer. That is too funny.
That is funny. I was just speaking to her yesterday. So that's so funny. So we'll talk some more. She gave us some insight, but I'm sure you can give us a different angle on that story as well. But how did you guys start investing in the Carolinas, right? In South Carolina, where you guys are at now. How did you guys start investing in real estate?
Yeah, well, I'll give you a little bit more about my background as well. Okay. So I was in the traditional investment business for about 25 years, and I managed $150 million in fixed income assets. And the last couple of years that I was in the business, I was very frustrated because our clients just couldn't make any money really off of that income. And so I was looking for alternative products. And, in the traditional world, it's very hard to get in the alternative investments into our portfolios. I looked at annuities, which are interesting products, but, they tie up your money and they have lots of strings attached to them as well. And so a year ago, November, so, just about 14 months ago, I left and decided to do something new. And I immediately went into single family. I'd had quite a bit of luck flipping single family houses for a few years. And so that was kind of a no-brainer to start there and get some rental income. But a friend of mine introduced me to the multifamily, and I'd actually never even considered it. I'd actually owned some REITs, but I had never actually done it on the smaller syndication front. So my friend introduced it to me, and so last April I said, this is a no-brainer. I need to get involved into it. So I've only been into it just about a year now.
That's very cool. That's it.
Yeah, it's been exciting. It's completely new asset, and I've learned that asset manager means different things than it did in the world I came from. So.
Right, yeah. But just to give us an idea of the world you came, what kind of stuff were you doing in that business? So you said structured investments. Sorry,
Yeah, no, actually, I mean, I did do some structured products, but it was primarily traditional bonds, like treasuries and corporate bonds and, and some municipal bonds. I mean, that's the kind of stuff we're primarily invested in. And then about 5 years ago, I started investing in a little more structured products because my hands were just too tied. And so I was doing it was more in a fund capacity. So we would look at products that would invest in, it was actually a lot of it was real estate. In fact, the CMBS market that, the syndicators sell into, we were the ones buying those. So our funds were buying the actual full syndication on the CMBS level. So, that was very interesting, but we certainly didn't get the kind of returns that the operators were getting.
Yeah, yeah. In that world, this real estate seems like just a little bit, unless you're investing in REITs or something.
Real estate's a nasty thing to
Yeah,
say. And in
that's what
fact, right.
yeah, why do you
Yeah,
think that is? You think it's just they see it as risky? They see it as, I
it's
don't know.
called competition.
Okay.
It's called competition, and it's also because you know a lot more money goes directly into the pockets. It gets rid of the middleman, so there's not the wholesaling going on that you have in the multifamily. You don't have the middleman. And so it's I'm actually doing is I have something very interesting. And so I've been working with a lot of portfolio managers, and I've been pitching, especially the ones that are smaller. When you're with the big houses like the Merrill Lynch's and the Charles Schwab's and et cetera, they're so big, they're handicapped, and they have to stay very traditional. So what I've done is I've gone to a lot of local investors because I'm also a CFA, which is a chartered financial analyst. So I've got my acronym that they'll take my call, and I have lots of contacts. So I said, let me do this. Let's do something as a win-win. So you can do your traditional part of your portfolio, but why don't you start carving out some alternative, and then I can take care of that. So I will send you clients, and you send me clients. And so that's one of the niches that I'm starting to go into is going to that and say, wait a minute, there's enough for everybody here.
Yeah, that's interesting. Yeah, and as we both know, right, and what we both found out that multifamily is such a great investment for so many people. I feel like, right? What I'd be interested to, from your background, now you have a wealth of knowledge and experience. What was it about multifamily that you really like?
Well, one of the things I liked about it is, obviously the income. Also, I mean, the lack of risk. I mean, that's the thing that really, on a risk adjusted basis, it just doesn't get much better than multifamily, because especially when you're looking against single family, they don't pay their rent for a month, and you're out. Versus, you're spreading it over more doors. And then also you have it on got the tax benefits that you just don't get in traditional investments. And so there are lots of different opportunities there. And and some of the others is that you get the benefits of depreciation. And so there are just lots of areas that to take advantage of it. And again, when you're looking at the fund level, if you buy into a REIT, they're taking advantage of that. But when you invest directly as a passive investor or as an active investor, you get benefit of them directly.
Yeah. Well, when you buy a REIT, essentially, right? Correct me if I'm wrong. Essentially, you're just buying a real estate stock to some extent, right?
Directly, yeah, yeah.
You're getting a fixed, a dividend return, right? Whatever that is, 5% or whatever.
Yeah, you're not getting a K1, yeah.
Yeah, exactly. Getting any of the benefits of the tax write-offs of, like you said, bonus depreciation of the appreciation of
Yeah,
the asset,
exactly.
and you're just getting that. So it's easier. I think that's more liquid, right? It's easier to get in and out of a REIT, but yeah, there's definitely a lot more benefits.
And that's one of the things in the investments is usually there's a direct correlation with the amount of liquidity with the kind of returns that you'll get.
Mhm.
But, like with an annuity, for example, you still have the 5 to 7 year tie-up. Some of them are even longer, but you just don't get the same kind of returns. You don't get the tax benefits, and the fees are huge. I
Yeah.
mean, the fees are that's one of the biggest benefits, I think, to multifamily, especially on the LP side, is the low fee structure. And you're buying a physical asset. That's another benefit. You can go and look at it, and you can see if the manager is actually doing what they say, versus when you're looking at a mutual fund, unless you're a very big investor, or it's usually have to be a large institutional investor before you can even start to look under the hood a little bit.
Yeah, and I really like as well that I don't want to say simple to understand, but it kind of is, right? If
Well,
I
it is, yeah.
No, to some extent, right? To some, there's sophistication involved with it, of course, but it's like,
But the thing about it is what's once you learn about the different metrics that are important to the multifamily, it's not that difficult because you can put your head, can put your head around. You're like, okay, how much are you collecting? How much is the rent? Where you can get extra fees? Because so all the measurements are very straightforward. So once you get that down, it's not that difficult, and it's getting your hand on the deals. It's the hard part.
yeah, yeah, but I also think from a an LP side, right, someone who's a passive investor in the deal, you don't need to be a rocket science to understand what goes
No,
into it, right? You buying a great market, right? And what is a great market, right? Most people don't even, you can quantify what a good market is, but you can
yeah,
also feel, right? Like most people now can pick a good market in the US if they thought about it, right? You probably don't want to be in
right.
New York, right? You probably don't want to be in California right now. Florida is a good place.
You think?
Atlanta is a good place. Yeah, Carolinas is a good place. Like Phoenix is a good
Yeah.
Texas, right? You don't need to be a genius to figure that out, right? And if you see a lot of stuff,
Yeah, the Northerners are flooding us now.
right? It is, right? And that's that's another simple, it's all you have to do is switch on the news to see that's happening, right? The demographic change, and you be like, okay,
Yeah.
people are going to Florida. Florida's probably a good place to invest. Then you see an asset, right? This is a good asset. I
Yeah,
see.
absolutely. And so, demographic. Yeah, yeah, absolutely. And we have a lot of people coming down and visiting, and it's interesting because I had just one investor who was asking me to come on and be boots on the ground for him. So that's one area that I've really been able to reach out and expand my network. Is they're saying, look, I want to be down in the Carolinas, but I need somebody locally. So that's really opening up a door for me on the asset management side.
Yeah. Yeah, you said something there really that, and I completely agree. But I'd love for you to expand on it for people to hear your version of it. Is that you said it's not that risky, right? It doesn't seem that risky, especially on the risk adjusted returns are really good, right?
Right.
Why you say that? Why do you think that? I completely agree, by the way, but I'm just interested in your opinion.
Yeah, yeah. One of the big reasons is because, and again, that as I explained, and the more doors you have, the lower risk, as long as your vacancies are in check. But if you're able to purchase it, when you're looking at the Fannie Mae, rules, you have to be at least 90% occupied to be able to close the deal. So unless you automatic, unless the doors that go down, your rental vacancies go way up, which usually doesn't happen if you've done your homework, then you keep those up. So, when you have tenant turnover, you really keep the risk down because, you're spreading that over quite a few doors. And then the added element of, who your asset managers are. And you also, they're the demographic shifts within your apartment building, they don't shift that dramatically. So when you're coming into it, it's not all of a sudden that, something becomes the hood overnight. And if you're doing a value add, it's not something that happens, it goes up. And so there's a lot less risk. But for example, I buy a corporate bond, they have one bad earnings report, you can go from a price of 100 to 80 overnight. And if that's a big portion of your portfolio, you could really get hurt versus you have two tenants that leave at the same time and you got 100 doors. It's not going to break the bank. And it's not like it's going to be empty for 12 months. You can fill that pretty quickly. So that's why on a risk basis, and the other thing is, the syndicators are very good, when you're in a class A, which is, at the higher end, is there's a risk level associated with it. So if you're buying a class C, it's inherently a little more risky, but you're telling your investors that it's a more risky investment. But even all else equal, so if you're talking about in the multifamily world, class C, class D, especially like class C minus, that's considered the riskier stuff. And let's even say D, which is the riskiest of them. If you do the equivalent on the corporate side, which they call junk bond, you could really lose your shorts. I mean, for example, right now, with some of the with the Keystone, for example, being closed down overnight. So much, I mean, about 20% of the bond market actually is directly correlated to the oil and gas industry. So that's what I used to watch, is the oil and gas industry, even though you could have, like Heinz corporate bond, because there's so many people that own a the broad names, that they all come down. And so you're really, the whole bond world is very, very, very sensitive to what's going on in the government and interest rates, where, you don't have that interest rate kind of sensitivity. Your interest rate is locked in for the most part on the investment side or on the multifamily side.
Yeah, and and I think it's kind of what you said there as well. It's somewhat predictable as well, like real estate.
Yeah.
It's not
Yeah,
completely
predictable cash flows. We like,
right.
because you can't even go into treasuries right now and expect to have, the consistent cash flows.
Yeah.
Who knows, on a 20-year bond, we may not even be having the US dollar by then.
Yeah, that's a whole nother matter, right?
Yeah, exactly. Yeah. That's a wrestling match to talk about it another day.
Yeah, I feel like we need that would be a special segment for sure to talk about whether.
Oh yeah. I can go off on that, but anyway, that's another story for another day.
Yeah. So tell us about this. Is this 72 unit? Was that your first purchase? What was your first purchase in multifamily?
Yeah, it was the 72 unit, and Springdale is just growing like crazy. As Tyson has its headquarters there, and Walmart. Everybody has to measure their Walmarts to see how well that's doing. They got their warehouse there, and so you have constant growth. And I mean, it grew 73% from 2000 to 2017. I mean, that's pretty impressive.
Just a little bit then. Yeah, that's amazing.
And it's ranked the 24th fastest growing city in the country. I mean, that's a pretty good market. And when I say Arkansas, people are like, Arkansas, what are you talking about? People have gone to Alabama, but people haven't talked about Arkansas. So
well, yeah, but that's good for you guys, right? And it seems like no, I've not heard about Arkansas much at all, and I talk to people all the time, obviously on this show. So that's a good plus for you guys. Hopefully, you get in early enough that everyone comes.
Well, and in this case, Jennifer's the boots on the ground because she's just a couple hours away, so it's great. And so she's looking at some other deals, and I'm really excited for what's out there because, as you know, Greenville, South Carolina is it's a fantastic market, but this is one of the top markets people come to. So the competition's pretty stiff and the prices are going up. And, but it's, so it's nice to expand my horizons there and go into a new market.
Yeah. How did you guys come across Arkansas? I don't think I asked Jennifer that.
Yeah, well, she was at a conference and she met a broker who gave her this, it was a off-market deal.
Oh, really? So literally
yeah, so it was through a networking event. Yeah.
But you guys hadn't been thinking about Arkansas at all at that point. It was just, here's an off-market deal. Oh, let's check it out. And then you made
well, she went down there on a road trip just to sniff it out, but it was right out of the gate. It came her way. And so, I mean, kudos to her. I mean, she came from the network marketing world and she is just phenomenal in that area. So people just, love to talk to her about the new deals coming her way.
Yeah.
And one other area I'm looking at as well is in Tennessee, because that's just 2.5 hours from where I am. So, the Knoxville area, and that's a big growing area, and there's not a lot of people there either.
Oh, very interesting. Very interesting. I'd be interested. So did you two meet at a networking event? How did both of you end up?
This is a great question. And this is my networking hack that if you go to my website, I'll talk about the hack a little bit more. But what I do is I went to Rod Khleif's boot camp. And I was already a member of Dan Hanford's MFIN Premium Group, and he's really, really good at investor relations. So that was really good, but it's not a coaching program. It's more of a mentorship type program. And so I was shopping around which coaching program that I would do, and I went to Rod Khleif's program, and there were a lot of people up there that they had speaking, because he has his star students up there sharing their wins. And so what I did is I contacted every single one of those people and asked about who's in their network. And since they're hungry and they're eager, and it tends to be some of the people that are newer to the market, they really want to expand their network very quickly. So I found this is a great hack. And so I've done a few other boot camps, and I do the same thing. So the way I met Jennifer was I met Chat, who was speaking at Rod Cleese boot camp. I reached out to her and she said, oh, I have this great group of female investors that I would like to invite you into that group. And so she connected me to another person who then connected me to another person. So I ended up getting into 4 different networking groups from that one reach out. So that's a great way if you're shopping around the boot camps, is to go to a few, and that way you get different flavors of different people, and it's a great way to expand your network.
Yeah, that's brilliant. That's brilliant, man. People connecting with each other and people connecting you to the next person, and you never know where that's going to lead, right? But I'd be interested, when you wrote to those people or reached out to those people, how did you reach out to them? Because it's one thing to say, hey, can you help me? I need help. I'm looking for someone, blah, 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 right? But these people are busy professionals and they usually
Yeah,
give.
yeah,
But
absolutely.
it's important. I think it's important for someone who thinks, okay, that's a brilliant idea, which it is, on how to do that as well, right? You can't just, randomly reach out to
Yeah,
them.
yeah, you can't just blast it. You have to reach out personally, and that's the first thing you have to know is what value do you add? Because what do you bring to the table? Because as we learn in all these different boot camps, is that this is teamwork. So investor relations is my specialty. That's what I love to do. That's what I've done. I know how to talk to investors, and I'm very comfortable with that. So that's something that I bring to the table. So that's what I did, is I reached out and I said, hey, I live here in Greenville, South Carolina. Don't know if you're looking for deals here. I'd be happy to check some stuff out if you want to learn a little bit more about this market. And if you're looking for anybody on the investor relations side, I'd definitely love to talk to you about it. So you have to reach out with some sort of value add. You can't just start spamming them, because that's a good way to get yourself blocked.
Well, it is, right? It's always a bit of the rule of reciprocity, right? If you're offering someone, a lot of times you feel like you have to give some. Oh, you don't have to, but you should give something back, right? And it's also, if you reach out to someone offering something, you come across differently as well, right? You shine a different light on yourself, right? Rather than, hey, give me something. If you're looking to give something to them, it changes that.
Yeah. Yeah, that's true. And again, I cannot emphasize enough to anybody new to this market, is you really need to know what value you can bring to the table. Because if they have 3 investor relations people and you're looking for investor relations, that's not a tree you need to be barking up, because that's full. And if you end up getting on a group with other people with everybody has the same skill set, well, one, that won't work. Because you'll all want to fight for that pie. But more importantly, this is teamwork. And so you need to think about all the different roles you have. And, you can even say, look, for me, I'm involved in investor relations. Is there something that, are you looking for that? Or do you have a hole for that? Or, are you an asset manager? And maybe that's something you'd want to bring to the table for me.
Yeah. What was it? What was it about Jen then that you thought that you two would make good partners?
Because, well, we hit it off right away.
Yeah.
And another thing is, I mean, she's a really, really smart cookie. And and I'm a numbers gal. And she's really in terms of reaching out, talking to the investor in terms of the investor communications, but then also, you got the finance part of it, which is very important.
Yeah. So she's more on the investor side. You're more on the analysis side. Would that be?
Well, I mean, there's a very large team
Oh,
with lots. That this is a very big. There's a lot of people with their hands in the pie in this one. But
yeah.
but yeah. So I'm really focused and generally looking for future deals. I'm really looking at the investor relations side of it.
Yeah. And that's the great thing about multifamily, right? And larger multifamily is that you have that room for quite a large team, right? There's, for example, I have some partners and there's a deal that we're looking at, and I think there's going to be 8 of us on the general partner side, right?
Yeah.
All doing various roles. And the great thing is, with bigger deals, there's bigger pies and there's room for everyone. And there's a multitude of tasks to be done, right, on multifamily, right, on bigger deals.
Absolutely. Absolutely.
It's better to have people allocated to certain tasks and that specialize in those things. And
Yeah.
I think the good thing about that is that you can go farther faster, right? If you try and do it by yourself, or maybe one other person, you can, but it's a lot of tasks that you have to do, and it can really bog you down. And you do stuff that you're not good at, and you do stuff that you don't enjoy. Where you find
And then you're not going to like it. I mean, people get into this business because they say, you can be your own boss, and you can pursue your dreams and what you want, but if you end up doing something you don't want to do and getting in a task that you're not good at and try to do everything, one, you're going to fail, and two, you're going to burn yourself out.
Yeah. And I would rather do five 100 deals than do a 500 unit deal with a team, and then try and do a 500 unit by myself, right? And I don't know, that's the best example, but
I agree 100%. Yeah, I mean, that's how you got to do it. I mean, there's some programs that are saying you can do it on your own, and that's just doing a disservice to everybody involved,
yeah.
and to the industry, really.
Yeah, exactly. Yeah. Well, cool. Well, tell us a little bit about. Jan talked a little bit about the deal, but maybe tell us a little bit about the high level on this deal, and then I want to ask you about the financial literacy aspect of what you do as well in terms of.
Yeah, definitely. So yeah, this is, it's a great deal, and it's based in Arkansas. It's a 72 door building, and it's a Class C, and it's a value add, and it was very exciting.
Yeah. Sounds like it's 72, even though you're doing it with a team, right? It's still 72 units. That's a pretty good deal for your first one, right? It's got to be pretty.
Well, I got to tell you, 70 doors was my goal.
Right? Really? What a coincidence.
Yeah. Well, and my friend who got me into this business said that's the magic number. So
because of on-site property management.
Yeah, exactly.
Okay, yeah.
That's really, because that's a big thing, is on-site property management is the key to being able to have these things be successful, because when you start trying to do that on your own, it just becomes a time suck.
Yeah, definitely. And just going good property management company is just, and I think Jen was saying that the property management company manages 2,000, 20,000, a ton of doors, right?
Yeah, a ton of doors. They know what they're doing, and they have it scaled.
Yeah, and I think that's, once you find that puzzle, that's one of the most important pieces of the puzzles to me in multifamily, is that property management, because that's essentially, right.
I thought my computer's just about to die.
Okay, I'll continue the conversation. So I think one of the most important components of multifamily is property management, because essentially, you buy a good building, right? It's just bricks and mortar, but the management of the tenants, right? Those are the people that make you the money. Those are the business, right? You're in the people business essentially, right? Because if you have a great building and nobody's in it, well, you have a great building, but what does it mean? But if you have a great building with great tenants because you have a great property management company, well, now that's a real recipe for success.
Yeah, property management can make or break you, quite honestly. I would say that's the riskiest part of the whole business.
Yeah, absolutely. So talk to you. I don't know if you said on this, but you said definitely behind that you've started a female financial literacy consulting program. What is it exactly?
Yeah, am I freezing up on your end as well?
No, you're great this end.
Oh, okay, great. Well, I'll just look at my frozen self then. Okay, yes. Now I have a company called Financial Literacy for Her, and what it is it's focused on helping women look at both investments. So it's everything from, and it's a coaching program. So it's everything that's from the entry level of basic budgeting and basic finances and long-term planning, as well as getting into really sophisticated products. And so we have coaches that can service all levels of it. And one of the things that I'm doing on the real estate side, on the multifamily side, is that I'm just about I'm putting together a scholarship program, because it's kind of a chicken and egg thing, right? Women who need this the most are the ones that can't afford them. So I want to put together a scholarship program, because women are going to, in the next few years, they own almost 50% of the assets in the US, and a lot of people are not literate at all. And one of the issues that I found with women is, for the most part, they really don't like to talk about money, don't like to talk about finances, and quite honestly, they feel like they've been mansplained. And so one of the things I want to do is, with this coaching program, is we have a mastermind, and we have some meetups, we have groups where women can come. It's a safe place where they can ask questions. You have experts like myself who are there to talk about different subjects. So we have our meetup groups, and that's more in the greater sense. That's more like your typical support group type of thing. And then there's the one-on-one coaching on top of it.
Wow, that sounds awesome. Yeah, I'm sure it is much needed, unfortunately, right? It's because it does seem like, it's like you said, it's just somewhat of a stereotype that the man takes care of the finances and, you know, the whatnot,
Yeah,
right?
yeah, it's true. And you have women in transition, whether the spouse has passed away, or you have divorced, or and quite honestly, for a lot of wealthier women, they have a lot of money, but they haven't really managed it or planned to it. Financial planning is very important, especially, we know in the multifamily space, it's very important when you're thinking about planning and taxes, and to have that greater plan. So that's why we have the sophisticated offered as well. And, it's really interesting because I was just at the MFIN virtual conference this past weekend, and I was a speaker there. And so I kind of kicked off the financial literacy for her meetup group, and actually I've been getting lots of letters from guys who attended and said, can I go tell my, significant other about this, or my sister about it, or my daughter about this? And so it really has stickiness. And so I'm really excited to see where this is going.
Yeah. Well, that's awesome that you're doing that. On a sort of high level, I know you can never replicate the coaching that you give people, but just, do you have a process that you kind of take them through, just that maybe someone listening can, take
Yeah,
some
absolutely. Just like any planning, it's really important to know what your dreams are, because no matter where you are, everybody has a why, and everybody wants to know what their financial goals are. And so so there's a lot of personal development on this side of it as well. So it's really thinking about mindset shifting and saying, this really matters to me. And no matter how much money you're making, whether a W-2 job or not, it's thinking about, how can you get from where I am now to realizing my dream, and feel alive enough to pursue, to think about what that dream may be? Because people have so many limiting beliefs, saying, my the biggest phrase that I spend a lot of time getting attacking is that I'm just a this, or I'm just a that, I'm just a mom. And it's like, that's the most important role. What are you talking about? You're not just a anything, you're a very important, and let's add some value to that. And what can you do with that? And how can we how can we attack that? Because once you get over the mindset part of it, the financial training is more mechanical, and just teaching some good habits. I'm sure you've read the book Atomic Habits and that kind of thing. So it's really that kind of mentality. Is once you know where you're going, then let's create some habits to get you there. And then what are your financial goals? And we spend a lot of time connecting people with insurance, with insurance agents, and with other people, to get some planning, to do some estate planning. And so you got lawyers, you got accountants, you got all the different service providers that are really important, because it's an overall financial plan. Just like the multifamily is one of the pieces of their assets, but they have other assets as well that they need to consider. And insurance is very important.
Yeah. What are some common mistakes that you see people making then, I guess?
The biggest thing is not wanting to think about it at all, quite honestly. And let's pretend it doesn't exist. And so what happens is, you're looking at traditional 401ks, for example, and especially if you don't have an employer match, after taxes, when you get your money out, you're only realizing about 50% of that value in the end. And so, there are things like for the lower income side, there's the Roth IRA. There are lots of different ways that are much more tax efficient. So nobody thinks about the importance of tax planning, no matter where you are on the income spectrum. And so I would say the single biggest mistake is not thinking about taxes.
Wow, yeah, because it's taxes are very real, and they're very,
yeah, exactly.
and there's no avoiding it either, unfortunately, right?
Yeah, taxes and death, and so we can't address death, so let's attack the tax side of it. And so there are lots of different, there's so many tax efficient vehicles to be putting money into. And then obviously just not thinking about having any kind of structure and routine. And and it goes back to, if you don't have a budget, you're not planning on a financial budget perspective, you probably don't have other habits as well. So again, it's going into that and really thinking holistically about your life. Where do you want to be? How are you going to get there? And what are the steps to get there? And if you don't have money, it's hard to do a lot of things. And so, in other areas, I work with a lot of Christian women, and there's there's a lot of people, if misunderstand the root of all evil is money, and money, that isn't it. So when money becomes an obsession. So getting over that hump, that money's not a bad thing. It's a very necessary means, and it's a currency of exchange, and that it's a good thing. So if you get over that mindset, it's a lot easier to start talking about money. And then I'm amazed that the number of people don't even know what their credit score is. I mean, that really baffles my mind, or even know what it is, quite honestly. It's pretty scary.
Yeah, and I think most people, like you said, they want to bury their head in the sand and just forget about it, right? And that just makes it worse, right? And the
Yeah,
worst.
yeah. It's like, never me. And like I said, I'm just don't say I'm just you're a wonderful person created for something awesome. Let's see how we can unlock it and start, and start having money flow your way.
Yeah, yeah, and I'm so happy you said that about money and the root of being the root of all evil. And it's just, unfortunately, people have limiting beliefs when it comes to money, right? You just don't talk about
Yeah.
it. I don't care about money. That's people love saying that. I don't care about money, right? Oh, I don't need money to be happy, right? Well, neither do I.
Right. That's a hand. I'm not going to talk. Yeah, exactly.
For these things, but yeah, so I love that you addressed those issues as well, because I think they're a big issue as well. So you've also written a book as well.
Yeah,
Yeah.
well, I just submitted my chapter for a book called Aspire Women Finding Their Purpose. And it's a multi-author book with 20 authors. And I talk about my experience. I'm also a worship dancer and a pastor and a real estate investor. And, so I do lots of different things. And so I talk about, the importance of staying centered. And so the book that is I've written a book called Energized by Joy. And so this book will be there. I took 8 chapters out of that. So there's excerpts of it in this upcoming book. And that will be coming out. The multi-author book, the Aspire book, will be coming out in early March. And then I'm shooting for about mid-June to do my own book.
Wow, phenomenal.
Yeah, I just really want, the whole thing is, what's behind Energized by Joy. It's just about, it doesn't matter whatever happens in your life, there's something to learn from it. Everything's a growth opportunity. And when you're looking as a growth opportunity and living in gratitude, that's how you find joy. And when you find joy, that's what gets you out of bed on the tough days.
Yeah, and there's always 2 ways to look at everything, right? You know what I mean? You can look at it with gratitude and joy and be happy and excited about what you have going on, or you can look at it the other way around. There's, be miserable and unhappy about what's going on, and that's only going to lead to one thing, right? And yeah, I like that. I like that a lot.
And that's one thing. I mean, my joke amongst my friends, particularly Jennifer, though, is like, I'm a blessing finder. When she calls me, I'm like, you can't be pissed off. You can't be pissed off when you talk to me. I will find, I can, I was in the PR business for a while too. It's like, I can spin anything into a blessing if you, just try me.
I'd be interested, just as a final question. You have so much going on. How do you find focus when you have so much going on, right? It's almost hard to focus on certain things, right? And do what's important. How do you decide what you're going to do next? What's important? What's not? Because there's so much in your world, it seems like, going on, right?
Yeah, there is. But the big thing is, I have my dream. I have my why. And my big why is that I want to be able to help women ages 30 to 60 particularly live in financial freedom and find security in a safe place. That's my big why. So everything that I do, all businesses that I have, that's my ultimate objective going towards that. And so I asked myself, is this activity going to get me to where I want to go? And then the big thing that I've had to do this last 6 months and accelerate is I had to get a virtual assistant, because then I decided, okay, yes, this activity gets me to this business to where I wanted to go, but am I the best person to do that? Because I'm a content creator, I'm an idea generator, I'm, and when it comes to property, I love to go out and look at things. I'm always out and about, and I'm out speaking, and I'm out, doing marketing kind of stuff. And so that's where I'm best, managing all my social media, handing all the administrative side of it. That's just not a good use of my time. So when I handed that over, I can just sit there and really be strategic, because you're really being strategic is really the key to that. No matter if you have, 1 business, 10 businesses, it's being strategic with your time. And the other thing is I'm varying I'm being very selfish with my time in terms, or protecting my time would be a better way to phrase it. I'm protecting my time and thinking about, okay, who do I let in my door? Whose door do I walk through, literally and on a figurative sense? And so that's what really helps me stay focused and helps me streamline it.
Yeah, that's brilliant. That's brilliant, because it's like you said, your why drives everything that you do, right? Is this leading me towards where I want to go? No, okay, I don't necessarily need to do it. Maybe I need to do it, but it's not the most important thing right now, right? And
yeah, exactly.
and then also, like you said there, you find what tasks are important that you have to do, and find what tasks you can get someone else to do as well, right? If you can get someone,
And the question I ask is like, does this task bring me joy? Does it bring me joy? And if not, I either have to get rid of it, or maybe think there needs to, be a redirection. So, I'm a serial entrepreneur. So I started lots of businesses. So I'm comfortable with this mindset. It drives some people crazy, but when it comes down to sitting on the operational side and just sitting there, and that side isn't my forte. I'm out on the run marketing.
You're definitely very busy and definitely very focused, energized, and awesome, I'd say. So it's really cool to hear your story. But as this show is called Wrestling with Real Estate,
yes,
I like to.
I hear this is the question everybody wrestles with the most, right?
Undoubtedly the question. The first question, yeah, it gets everyone, is what would your wrestling name be?
Okay. This is a funny one. Wheat truck diver.
Okay.
And the story behind that is, and it says a lot about my personality, because as you haven't gathered, I'm a very curious, adventurous person. So when I was 19 years old, I hitchhiked across South America. And I was with 7 other people. And what we would do is we would go to the major city, and then we'd split up and go out to the countryside. Well, hitchhiking was the primary mode for getting around then. And this is in the late 80s. And so the only ride we could get across the country of Uruguay was in the back of a wheat truck. I mean, a closed one. I mean, it was nuts. And so we went across the country of Uruguay, and we landed up in a pasta factory. And it's just anything. I'm up to try anything. I'm a curious person, and there's nothing I won't investigate. So there's nothing I'm afraid of.
Wow, what an adventure! How long were you in the back of that wheat truck for?
It was like a 3-hour ride. I mean, wow. They could have taken us to the slaughter, and there I was 19. I thought it was hilarious.
I was going to say, I guess you were fearless at that point, huh? You weren't worried about it.
Yeah, fearless. Wow. Fearless adventure.
I love that. What a great story. Every wrestler has a special move. What is your special move in real estate?
My special move is really honing what people have to bring to the table, and where they belong in my universe. Because that way, I think in categories. That's the finance person in me. I really think in files. And so it really helps me understand who people are and where their lane is, and in terms of networking. So, networking is such a key, important part of this business. And if you know whose file to pull out and who to refer who to who, that's really been very, very beneficial, because as I give names out to people, they obviously return the favor.
Yeah, very cool. What's been the biggest body slam you've taken in your real estate investing career?
Yeah, the biggest body slam. This is really actually before I got into multifamily, and I was just doing well. I was getting into multifamily, but I wasn't clear what it was. And so I walked into the biggest commercial realtor in town and pitched them this business. I was so clear. I had no idea what I was talking about. And I got in there on a referral, and it was so embarrassing, because after I got into multifamily, I realized how little I knew. And fortunately, I was able to turn it around with somebody, but that was definitely one of the most humiliating experiences I ever had. So do your due diligence and know who you're talking to.
I like your confidence, though, to do that, to go ahead and do that. That's great that you had that confidence. So was there a moment that you were standing on the top rope getting ready to jump, but you were too scared? What was it and how did you overcome it?
Yes, it was going live with social media. I was so, it's so interesting because, you know, I'm very comfortable speaking in front of groups and doing videos and doing things like this. But when it comes to social media, I had such a big mind block to it. And it really hindered me for a while because I wasn't moving forward with it. And so how did I get over it? I said, I'm gonna do it. Go and close my eyes. And you know, because I said if you don't do it, you're not going to get anywhere, and you don't even see these people anyway. So even if they think you're the biggest fool, you know, I mean, there I am. I mean, just think about it. The story I just told you. I'll go in front of these executives, CEO of Blackstream, and pitch them, not knowing what I'm talking about, but I'm petrified to start doing, you know, doing one-on-one notes on LinkedIn. I mean, that's silliness. And so once I got over that, now, you know, now it's been great, and just things have started taking off after that.
Yeah, and that's cool that you know you're overcome it, because we all have fears about stuff, right? And especially something like social media can seem intimidating, and we worry about what other people's opinions of us and how we're going to look and blah blah blah. People going to like it? Is people going to hate it? What blah 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 blah. But if you just go ahead and do it, right? What does it matter, right?
And not getting stuck on the number of likes, because what I found out is a lot of people, especially in LinkedIn, lots of people see it and don't even comment or acknowledge it. But then you'll be talking to them later, like, oh, I saw that you've been doing it. I was just in a meeting last week, and somebody was telling me all about this book that I was just telling you about, because I announced it on there. Hardly anybody even acknowledged it when I announced it. I'm like, okay, people really do read my stuff. And so it's like, yeah, it's definitely worth the time.
Yeah. Well, great story. Thanks for sharing that. And thank you so much, Karen, for being on the show. It's been a really interesting story. There's so much more I could have asked you. Could have talked for another 2 or 3 hours easily about so many different subjects. You got so much.
Well, thanks for having me. I really appreciated the time. I enjoyed it.
Oh, absolutely. I'm glad you did. But before we go, if anyone wants to reach out and get in touch with you, how can they do so? And plug everything that you have. Everything that you have, please plug it so people can find out more.
Okay, absolutely. So Karen Oeser, and it's Oeser, and it's at East Light Investments. My website is eastlightinvest.com. You can reach me at 864-551-1820. And my email is Karen@eastlightinvest.com. Financial literacy for her is my other company, and Energized by Joy. Both of those are primarily being marketed through Facebook. And so you can be sure to check me out there and sign up for it. And we also, this Thursday, we have a get together for financial literacy for her. It's our kickoff meetup. And if you go to, let me see, the best way to get that to you is if you go to the financial literacy for her on LinkedIn, their invite is there. And it's also on my LinkedIn profile. So go to Karen Oeser, LinkedIn, become my friend. You can get the information for this and come join us on Thursday. And I will have Erica Neal, who's a specialist in infinity banking, and she'll be co-hosting it with me.
Very cool. Well, a lot of places. I'll include all that information in the show notes and in the description below, so that people can find everything there as well. So it's nice and easy for people. Well, Karen, thank you. Excellent. Yeah, nice and easy. Just make it nice and easy.
You are welcome. Thanks for having me, and I'll talk soon.
Cool. Have a great day.
All right. Bye.